watching BloombergQuint. We're coming to you live from the World Economic Forum's annual meeting, which is yet to begin, right outside the Congress Center, which is the hub of all activity here in Davos. And I have with me today Asia Chairman of McKinsey, Oliver Tonby. Oliver, thank you very much for speaking to us.
Nice to meet you, Monica.
You've just put out a Asia report at McKinsey, and I thought there were some interesting details in that. For instance, Asia accounted for over $1 of every $2 in new investment over the past decade.
That's right.
But that was mostly dominated by China?
It is dominated by China, but not only China. So you're right. We've just released a report. It's called Corporate Asia, a Capital Paradox. And the reason we say that is, as you rightfully point out, there's been a huge amount of investments globally, but also in Asia. $1 out of every $2 has been invested in Asia over the last 10 years. A significant part has been in China. If you look globally, that's been about 1/3 has gone into China. But that means that there's still a lot of money that of investment that has gone into the rest of Asia. The paradox is that a lot of that has been into value-destroying sectors.
And India is, in fact, been amongst those countries which has seen a considerable amount of that value destruction. So let me put it in context. On the basis of the numbers that you all have put in, Asia accounts for half of the global deterioration in economic profit. The global deterioration being somewhere from between $726 billion to now negative $34 billion.
Yeah.
And there are sectors that have contributed to this deterioration, and then there are countries that have dominated this.
That's right.
So let's talk a little bit in detail about what your insights are on this, and then I'll get to the India question.
So, first, I think it's important to understand what is it we are measuring. So we're talking about economic profit, which is basically the profits generated by companies minus their cost of capital. So it's important just to establish that to start with. And you're right, over the past 10 years, we look at a 2-year period, 2005 to 7 versus 2015 to 17. In that time frame, the economic profits have dropped from positive 700+ billion worldwide to a negative 30+ billion worldwide. Half of that drop has happened in Asia. Now, if we stay at the global level first, there are 3 things that have disproportionately led to this drop. Number one is energy and materials investments globally, anywhere in the world. Those have, by and large, in most countries, been value destroying. We used to have a super cycle in the 2005 to 7. Now those have been value destroying in that time frame that we looked at. Secondly, is European financial institutions account for another large part of the 700 decline. And thirdly is China in itself is also is a huge part of the downward drive. As I mentioned, 1/3 of all investments happen in China. Almost $10 trillion of investment in China. 80% of that has been in value-destroying sectors. So that gives you a little bit of a picture of the global, what causes the global downdraft, so to speak. Having said that, we see value creation in pockets in all countries. There are pockets, there are some sectors in most countries, and we see some sectors globally that have been very positive. For example, in the IT and the tech space globally, we've seen that has been a value creator globally. We see pockets in Japan, the capital goods sector, which means investments into heavy manufacturing, automotive, chemicals, has been value creating. We see that tech investments into Japan, Korea, China have been value creating. Even if you take energy and materials, which I mentioned was a large reason for the downward drop, in some places like Southeast Asia has actually been a positive value creation contributor.
Okay. Just to take this forward a little bit, sorry, I'm going to push the India question, one question behind. What does this data tell us about what this decade could mean in being able to improve some of that value creation or the economic returns of the investments that Asia has dominated over the last year? Are there sectors that Asia could do better in? Are there areas that countries could do better in? Is there any way to extrapolate this data to what the future might hold then?
Yeah, listen, that is an excellent question, and it's very difficult to predict the future. But I would say 2 things. Number one, now we hope these investments are now sunk. They've been put in place. So we now hope to start seeing the returns on some of these over time. So the picture will change quite a bit. But I would zoom in on 2 things in Asia, particularly. Number one is what we call the troubled 200. These are the 200 largest companies that have destroyed more economic profit than others. We somehow need to find a way to turn around these. And we've seen that turning around some of these troubled 200 has been more stubborn in Asia than in the rest of the world. At the other side of the curve are the terrific 200. These are the companies that really have created a disproportionate amount of that value. And many of them are either in tech, in consumer, and pharma, and we expect to see those continue to drive. And that is actually true across many countries. So at a country level, you would hope and want the country to disproportionately invest in some of these sectors going forward.
And could this be the decade in which we might be able to reap the fruits of the investments that have gone into play in the previous decade, which have not yet paid off as much, but that could be a big growth booster for Asia this decade?
You would hope so. You would hope so. But as I mentioned, some of these companies have been proving quite stubborn, as in
I understand that.
very tough to turn around, but you would hope so.
Okay, I want to talk a little bit about trade in, within Asia and the rest of the world, and I think that brings me to RCEP, which is, the most important trade treaty that many Asian countries are currently in the process of either signing up, sans India, or implementing in some ways. What do you make of the impact this could have in the way Asia trades with the rest of the world?
So, first of all, what we've seen over the last few years is a shift in globalization and how that is playing out, as we well know. In Asia in particular, we're seeing increasing regionalization. So we've done a lot of research looking at all kinds of flows, not only capital, not only trade, but also in technology and flows of people and so forth. And we're increasingly seeing Asia for Asia in these flows. Just a couple of examples, we see that travelers, now Asia is responsible for a huge part of the travelers worldwide, and more than 70% of those travelers are actually within Asia. They travel within Asia. Asia is responsible for 48% of international students. A number of them are intra-Asia. Most of the trade is actually happening, almost 70% of the trade is happening within Asia. Capital inflows, capital goods is happening within Asia. So we see Asia for Asia. So that's one of the chapters of the next, of globalization going forward. RCEP and such treaties, I think, will increase that regionalization because some countries have opted out, as you know, but many countries still are in. We are positive to these trade treaties. We believe that they help smooth trade, and that is generally a good thing. We're not going to second guess any countries and what different countries do. They're looking after their people as best they can. But in the long term, we do see a positive benefit for reducing trade barriers.
Do you think then India missed a step by not signing up at this stage, or are you hopeful that it will eventually happen a year or two down the line?
That is for up to others to decide. I'm not an expert in that, and I don't second guess any government. I think India's government is doing what they think is right for India, and I can understand that there are pros and cons here.
Okay. Two specific data points about India that interested me. One, I think India had only 142 companies in the G5000, as you'll call it, or the 5,000 largest firms in the world. And China had 900, which again goes to underscore the contrast in size and the fact that China has been moving at an incredible speed, which India has not yet been able to achieve. And secondly was in your description in the report on the destruction of economic value, India did seem to be amongst the 2 or 3 countries that had probably the highest numbers with regards to that. How do you see the position of India in Asia? Of course, we're amongst the largest and all of that. And what the next few years might speak of India's role in Asia.
So if I'm allowed to have 2 thoughts at the same time.
You can have 3, yes.
If I'm allowed to have 2 thoughts at the same time. Listen, of course, I am, like many others, worried about a number of things when it comes to the world and also to India. When you look at topics such as sustainability, environmental sustainability, inequality, and what have you, you get worried. When you look at things such as the recent slowdown that we see globally, but also affecting in India. And when you look at what's happening in geopolitics worldwide and tensions in respective countries, you do get worried. The other half of me, though, is I am optimistic. You're right. In the G5000, India has 140 odd companies. That is correct. But on the positive, that's a doubling over the last 10 years.
That's true, yes.
So it's a significant growth. And let's also be clear, many regions and other countries have actually reduced the number in there. So I think that's a positive. It's also positive when you look at India, look at the number of unicorns. If you look at the innovation that's happening, if you look at technology, if you look at the growth, the increase in consuming class in India, these are all factors that lead you to be optimistic. So on the unicorns, India now has more unicorns than Germany, as an example, and one of the highest in the world. So I think, as I said, I'm of two minds. Long term, I come down as hopefully a realistic, but an optimist, or a realistic optimist, I would hope.
And shorter term?
Short term, listen, there are worries. I hope that we can resolve many of them, including hopefully some here in Davos. But I am an optimist by nature.
Oliver Tonby, thank you so much for that insightful picture into Asia.
Really nice
Thanks
meeting you.
very much,
Thank
and
you.
nice to have you on BloombergQuint.
Thank you so much.
Thank you.